What's good, everybody? It's your boy, Reckless Ray Dinero, and we back at it again with portfolio updates. But before we get into that, let's do the housekeeping. First of all, shout outs to the Bag Chasers. You will be getting this Sunday, March 26th, the day of recording, because you're a Bag Chaser. Bag Chasers get it first. Before we go forward, everybody else, shout outs to you. It will be Wednesday, March 29th, that you will be getting this. We are closing out the month. Happy hump day. Hope your week's going well. If it's not, make it well. It's never too late to change. It's been a little bit of a wild week in crypto. Little sideways action. We're doing got a little crypto stimmy off the Arbitrum airdrop. If you haven't claimed it yet, arbitrum.foundation is the link that you go to check to see if you qualified. If you used the chain, if you did the quest that I linked about 6 months ago, you got a little bit of money coming your way. It's a good thing. With that said, this week's top 10 is as follows. We'll go ahead and get that out of the way first. Starting off with number 1, Ethereum, ETH. Number 2, Synthetics Network, SNX. Number 3 is now Arbitrum, ARB. And that came to us freely, which is why we are super in the green. And we're working on not fumbling that bag. Number 4, Wrapped Bitcoin, WBTC. Number 5, Yearn Curve, YCRV. Number 6, Alchemix, ALCX. Number 7, SBTC, SBTC. Number 8, Frax, FRAX. Number 9, USD coin, USDC. And rounding out is number 10, Bitcoin, BTC. Changes that we've made this week. Obviously, we got into, and this is going to refer back to the topic of the video. Hedging your bets. Now, first we're going to go micro, and then we're going to go macro. So we got to get it from the portfolio perspective first, and then we'll do it from the global perspective second on me being some Yahoo who's on the internet showing you how I built out my portfolio and tracking it with you so that we can see what the results of these moves are, good or bad. So this isn't financial advice. This is just what I'm doing personally. I spill my beans so that, I'll lose my money so you don't have to. In this crazy crypto world where everything's digital. But things that happened this week. We got the Arbitrum airdrop. Now, it's still in third position firmly, but what we had to do was hedge our bets. So we got the Arbitrum token, and I couldn't find in my research throughout the week a single asset staking position to just stake those tokens. Otherwise, I would have just done that, because the price that it came out at, and those of you who are in the Bag Chasers know that I was in the crypto channel saying it was too low of an exit point, because what happens is, obviously you can see between last week and this week, our profit, while we are still grossly in profit since January, it's down from where it was last week's video. The reason being is, as the Arbitrum airdrop actually went live, all the people who don't know what they're doing, instead of hedging their bets, they just sold all the tokens and took the money and did other stuff with it. Which is cool. It's everybody's personal decision, not mine. I actually use this network. So I wasn't going to do that. I was just waiting for, which actually gave us some really good entry points, which is weird because normally on launch you don't get really good entry points. But, market's a little bit different this year, and the people that are in it a little bit different this year, and apparently other people had different ideas on what they were going to do with their Arbitrum tokens, which I rock with that. Like, that's cool. Good for them. Me personally, I was not trying to sell any of them, but I couldn't find, as you know, future financial strategies. We don't do stagnant money. I don't do stagnant crypto for real. Unless it's Bitcoin. I don't even let Ethereum be stagnant. There's too many options for you to get to the bag on that you don't have for Bitcoin. So once I came to the conclusion that I could not locate a set point for getting these tokens moved around and staked, I went ahead and decided to yield farm them because I did find a yield farming option. I found multiple yield farming options. So that is part of a yield farm that is based on an Ethereum Arbitrum pairing. And, it's getting right now, because it's launch, obviously, it's getting them good percentages. So it's up over 100% APY, which is awesome. And so what I'm going to do is the half of them that I had to convert over to Ethereum, I'm just going to buy back into that position, dollar cost averaging, with the returns on that position. And that's what I've decided to do. And then we'll figure out what we need to do moving forward with that position, because like once it gets whole again, I have a set metric on, like, I was looking at probably between $3 to $5 exit on that half to get money back into the market. So what will probably end up happening is I'll be looking for that range, and once we get back up in there, whatever I've got, like, I'll have the coins that I've bought back will be the ones that get sold off, which will, it's to get converted to get back into the market. I think that's what we're going to do with it, which is cool. The other update was, and this has come into my purview with my budgeting. We have started acquiring Bitcoin Direct. So that's going to start inkling its way up the chart. And the reason being is, as I was looking at the way that I was distributing my money, and like me personally, I try to aim for around, I'm shooting for a stretch goal of 50% of my whatever income that comes in going directly into the markets, into savings, what have you. At present, when it comes to take home, I'm at, I think, 35 to 37%. If we look at it from gross, I'm at 20. Now, I normally only factor this off of the take home, which would mean that out of my take home, with the way that this seems like it's breaking down, is I'm about 10 to 15% off from my gross. So factoring that in, I would need to be when I get to 50% of my take home, that's going to put me at about 40% of gross, which I'm totally cool with, because I only worry about the take home. But then, like, when I was looking at it, I don't factor in the money that goes into my 401k or any of the stuff that I have set up that pulls money off the top to keep me in the lowest tax bracket that I can possibly be in. That said, actually, you know what? I'm actually a little bit higher. It's probably about 25%, because I didn't add up the HSA money that gets deducted every month either. So, that's a little bit off, but like, I base most of my stuff on take home because that's what I realistically see. And that's kind of my ideology on it. I don't I don't really deal in the whole gross pay conversation because I'm like, that's to me, in the way that I look at money and the way my brain works, that's not real money. So the pivot that I've made is I started out of the money that I pay back for my credit card floating debt. Since we're going into a bull run, and that's usually gonna start kicking out really high income, really high ability to convert money over. When you're running into an inflationary environment, there for me, there's not a rush if dollars are deflating and my crypto or my assets or my portfolio or any of my assets are going up in value while the dollar is going down in value. I'm not going to rush to pay back stuff that's going to be cheaper during the bull run when I can pay it all back. So while I'm still managing it, it's not like necessarily a minimum scenario because I don't like looking at numbers. I don't like looking at credit card debt. The numbers in and of themselves bug the crap out of me, but I have started pulling back, like out of the total that I would be putting into that, I've started pulling back a couple of $100 or more per that payout to get those to chunk at that debt. I'm just chunking it slower, which is fine. I know the finance charges. I get it. I'm making well over the $26 finance charge. Like I'm not losing money by any means on any metric of any of this. But while I have been trimming back on buying stuff, I am also trimming back on how fast I'm trying to pay that off because like I could pay it off, but then I could also put more money in the market that's going to make more money. Then I've opted for that. That's me personally. I've done this before. I don't keep over $5,000 in credit card debt, float debt is what I call it. And I am very comfortable with that considering the last time that I was in this situation where things were tumultuous and we were going into a bull run and money was going to be dollars were going to be much cheaper later for me than they were now. I did this with about $30,000 and I definitely like the results on that. So I've started dialing back. I'm just not going to buy anything. That's not funded. That's not fully funded. Um, and I'm going to keep adding the additional investments into my bag. Like I'm going to use my money to make money. And so since I know I'm clearing those finance charges, um, I'm clearing them now. Like if I technically wanted to, I could go ahead and convert the debt that I've accumulated now over into a 0% interest state and pay it back with my stuff with my yield farming gains now. Not going to do that because like I'd rather continue putting those gains back into the market as well. But if I wanted to, good. So it's a good spot to be in, and it's good to have options. So I'm going to utilize a tool that I have in my arsenal. And so you're going to see some Bitcoin come back in because instead of putting it directly into the market, into some of the more risky stuff, this is actually going into the allocation of money that I leverage against to buy and pay for things. So I'm just going straight Bitcoin, it goes straight into that account, and it sits there until it's ready to be used. So that way when I take a loan against that money, I can pay myself a little bit of interest for borrowing from myself. Because technically speaking, there's no reason that we shouldn't be treating ourselves as well, if not better than the bank. So if you're going to pay 27% in credit card debt, then having an account that's set up to where it's your own internal personal pool of money that you can borrow against, and I would consider it borrowing, you should pay yourself back with at least 10%, because like, why aren't you getting any money? You borrow money from everybody else and then pay them back extra, but you don't pay yourself back extra? I don't do that personally. And the way that account navigates is whenever I tap that account, I do put a 10% repayment back. So like whatever I borrow out of it, I pay it back plus 10%. And that's kind of the way that I navigate with it. But I digress. We will keep it moving. So now we're going to jump into a few news articles. There was news, and I'm actively looking for news that I feel is relevant or interesting to me for you guys. Because I'm figuring, those of you who are rocking out with me, your brains work kind of like mine. We're kind of on the same wavelength. And I want to add as much value as possible. Because, like, the portfolio stuff, definitely good, definitely awesome. But, like, these are things that are affecting the market and things that I feel that we should know about. And so, we're going to jump into the first one. Kwon has been arrested. Now, the reason this is interesting is because this is the man who founded Terra Luna. The Terra or the USD, they had a stable coin. There was the Luna platform. We all made a bunch of money. It was great until it wasn't. And then we lost a bunch of money. I lost somebody's salary in that fall. And while I don't since they have deemed he has broken laws, I am okay with this man being arrested because they was looking for him. He went on the run, didn't want to deal with it. He had a bunch of money. I lost a bunch of money on this deal. A bunch of other people lost a bunch of money on this deal. And this was one of those things where it wasn't some crazy pot shot, and like you'll have your YouTubers who don't understand the market, don't understand DeFi, aren't actually in DeFi, that like just do Bitcoin and Ethereum on centralized exchanges and really aren't doing anything that think that everything that isn't the stuff in their purview is either a meme coin or you're just going to lose all your money. Even though that's not true, what they're doing is they are personally missing out on opportunity while simultaneously scaring the multitude of people that listen to them out of even looking at these opportunities, because they say everything is the worst thing on the planet and everything's terrible. Totally fine with that. Stay in your lanes. But everybody was involved with Terra Luna. Exchanges were, decentralized exchanges were, like everybody, we was all eating together at the table, and then the table got flipped over out from under all of us. Like everybody lost money. Apparently somehow Do Kwon made out with a bunch of money. So, that's a little bit sus, because he took that money from literally everybody. Like it wasn't just the big guy screwing over the little guy. Like this guy screwed over everybody. Everybody got that business. He gave everybody the work and dipped. And here he is looking all goofy and shit. So that's the first piece of news. The dude was on the run for so long. That's, he had a good run with it, and now he's going to have to do his whatever it is he's going to have to do, however they work this out. Like I don't even know what they plan on doing to this man, but we'll definitely keep an eye on it, because this was one of those things where crypto, it almost seemed for those of us in the market like we were legitimately attacked. Like this was a scare everybody out of the market. Crypto's going away. It's all over. The sky's falling. Pack it up. Call it. This market's done. This was like a sword to the chest of the crypto industry, because it touched literally everything. So, play dumb games, get dumb rewards, I guess. And he got his, so they caught him. So, hi bye Do Kwon. Hi bye Do Kwon. All right. So now we're gonna get into some big news. This is big news, and there isn't enough coverage on this. This is big news in the positive sense. Actually, the last one was big news in the positive sense as well. Don't rip people off. Don't run off with their money, because that's bad, and it makes you kind of a ne'er-do-weller, if I would, a bad person, an underbelly of society man. This though is awesome in the positive, because I was talking about it and everybody was like, whatever. So like, now that it's so in your face that we can't deny it, all of you, oh, crypto's never going to be a thing. Oh, what's crypto anyway? Well, Fidelity, look at that. Oh, did they just open a crypto trading platform for all of their clients and constituents? If you are on Fidelity, if you have money in Fidelity, you now have the ability to trade crypto. It's not going away. It's not leaving anytime soon. This is a thing. This is the future. This is your life. Specifically, Bitcoin and Ethereum right now. I mean, they might put some other stuff on there, but it doesn't even matter. It's Bitcoin and Ethereum. When I tell you to do the boring thing and buy Bitcoin and Ethereum, this is why. They're not going away. Not anytime soon. Like, this is the current narrative, and if it changes, so help me, I'll be on whatever the next thing is where we're eating. But right now, this is what it is. Not going away. Becoming more mainstream. More access. More awareness. More people able to get into the market. More people able to secure themselves for what's coming. And I'm still going to say this. This is still extremely early. And it's not a matter of being able to go out and buy an entire Bitcoin. I would strive for that as a goal. Definitely a good worthy goal. Good worthy endeavor. Great retirement play, in my opinion, as a brokey who doesn't know anything and isn't giving financial advice. But that said, I would also go try to get 32 Ethereum. Also a great idea. Great retirement play. Good opportunity for passive income. But this is as mainstream as it could possibly get for right now. Like, this is a player. Like, everybody knows Fidelity. I'm waiting for everybody who said that this wasn't going to happen, that to go ahead and crawl out from under your rocks. Like, where y'all at? Where's that conversation? Because we're not having it. There is a wealth transition happening. Everything that I've been screaming about for the last 10 years is coming to pass. More or less. Specific to crypto, definitely. Because all it's doing is encroaching more and more and more into the mainstream, to the point to where it's going to be just like with the internet boom. Of course, there's going to be risk and volatility, but everybody who sat on their hands and did absolutely nothing are still broke. Spent the rest of their lives broke. Big wealth transfer happened, and they didn't get none of the money. Still at the bottom. Created a whole new iconoclast, upper class 1% of people. They chose not to move. Are you sitting on your hands choosing not to move? That's my question. Matter of fact, hit me up in the comments and answer it. Are you choosing not to move? Are you sitting on your hands watching everything go by you, watching the wealth transfer, and then after this dust settles from this wealth transfer, are you going to be sitting there going, I could have had a shot at that. I could have tried that. I watched the videos. I didn't do anything, but I heard about that. Are you going to be really educated about something that you had no part in and no results from? Is that going to be you? I would hope not. And I'm not trying to say that this is the only tool, but what I'm saying right now is out of all the tools available, the wealth is not being transferred into anything else. Other tools are definitely available, but the wealth transfer is happening, and this is the narrative, and this is where the ball's going. So you might want to touch on that. That's all I'm saying. Last piece of information, which is also tied to this. Federal Reserve data has showed that bank deposits dropped significantly between March 8th and March 15th. During the same period, borrowing by small U.S. banks reached its highest rate because they have no money in them. Now, because people don't trust them, as they shouldn't. Meanwhile, Bitcoin has risen by 35% in the last 2 weeks. People are stopping to putting their money in banks. They are starting to put their money in Bitcoin. I mean, they're as volatile as it is, it's anti-deflationary. Because everywhere else whose economies have collapsed are also using Bitcoin because it's more stable than a free falling dollar. It's more reliable than a bank that's going to do right by them before they do right by you, because their key directive is to protect themselves, not you. But as long as we have a society where people believe that it's somebody else's responsibility to save and or protect them, this is going to continue to happen until those people look around and see what other options are available. And they find something like Bitcoin. They find the cryptocurrency space. They take the orange pill, if you would, and realize that they could be their own bank. Like, sure, you can use banks minimally, but like after you realize the banks don't actually work for you, there's not really much else to talk about. Then it becomes, okay, so until you're in a situation where the bank is working for you, you got to work for yourself. You've got to protect yourself. And this is where I get to hedging your bets. So the original move that we made with the Arbitrum Ethereum yield farm is a hedge bet, because I'm only half exposed. I got the free tokens, converted half of them over into something that I'm very long on, and I'm farming the interest off that from that position, where I'm only half exposed to Arbitrum, which is extremely volatile right now because it just released. Hedging your bets. When we look at the moves that I make when we are actually in the full-blown bull run years, I also hedge my bets. Last bull run, when everything was blowing up, what did I do? What did I do when everything was blowing up? I cleared out my personal debt. That's a bet hedge. Because now I removed all that interest and freed up all those bill payments to then be able to invest. What's the other thing that I did during the last bull run? I purchased a property. Now, when Bitcoin tanked, my property value went up. Those two things, I have noticed, actually do run pretty inverse. So now, as far as like a wealth balancing act goes, even though I'm in this very volatile market, I would rather have a house. I'd rather have my home than cash. I would rather. I mean, the only other thing that would have been better was having money in the stock market, but then the home provided two things. I have equity now, so I have the ability to navigate off that money, and I'm not the type of person who believes that homes are forever and looks at homes as though they're some great thing. I look at it as a tool just like anything else. So I will use that money. The other thing is I made my payment situation, the largest payment that you have is your rent or your mortgage. That's consistent every month. I stabilized that because I bought at the beginning of the pandemic when everybody was running for the hills. During the pandemic, I have multiple friends who have had to move 2 or 3 times because their rent went up so much that they couldn't afford it. Now, the one thing I will say actually happened to me personally during the pandemic, and it only happened once. My taxes went up, which changed my mortgage payment. But it wasn't $200 or $300. It was like, I think 80. And it's not going to happen again in 3 to 6 months. It happened once. And I can afford the $80 easily because I didn't buy more house than I could afford. I didn't let them talk me into getting more than what I needed. I got in the area that I actually wanted to be in, and I got it within the range of what was going to work for me. And then I finagled it to where I don't actually pay that note. So it's all about how people are choosing to navigate and the decisions that you're making and what you're doing with the money. I am an advocate of shoring up all ships as quickly as possible. And so I control the controllables. I focus on those things. And for those of you who are like, "Oh, renting's the best." Like, I mean, I live in a city where it is more expensive than a mortgage payment, right? It's more expensive than a mortgage payment by the tune of probably about $300 to $400 a month to rent. But, everybody says blanketed across the board because they're the area that they live in, that everybody should be renting, and that's how you do it. And it's like, well, I could see that at a certain point if you're rich, but rich people are telling people to skip steps that, like, isn't actually going to net them getting rich in the long term, in my opinion, unless they're lucky. I don't believe in luck. I believe in controlling the controllables. I believe in being prepared and capitalizing on opportunity, and then letting other people tell you we're lucky. And we're going to leave off on that note. Control the controllables. Also, hedge your bets. I understand going all in, but you should. After the first bull run that I was in, and I walked away with what I walked in with, and just a hair more. I was like, we ain't doing that again. We making some tangibles. We're turning pretend money into real money. We're gonna have lasting results. I don't like having a great play, going through the bull run, and then walking away, eating every bit of those 70% drops. I'm fine with being in the market, but I like to have something to show on the other end of it, to where you're walking away better set up for the next bull run, and hopefully moving your situation ahead, because everybody out here working hard. And I'm not trying to be grounded down into nothing and then walking away from the table with the bare minimum. We are anti-mediocrity on this side. So, with that said, bag chasers, we're going into a fresh week. I'm hoping that you're getting prepared for this week. I'm hoping that you're looking at the world around you and understanding that we are in the middle of what will probably be, historically, for our generation and the generation behind us and the generation behind them, the greatest financial war that we've ever experienced, the greatest wealth transfer that we've ever experienced. And I'm hoping that you're positioning yourself to take part in it, because if you're not, you're just going to be cannon fodder, and the cannon fodder isn't coming out of this one well. Not the way that this is going. Ways to support the channel. You'll notice I've cleaned up the description. Much easier to navigate now. You want to join the Bag Chasers? That's down there. It's at the top. You want to get this early? If you're getting this Wednesday and you want to get it Sunday, that's how you do it. You want to be part of a great network, intelligent people who are of like mind. Definitely click that link. If you want to support the channel, there are also multiple ways. I've got the Cash App. I've got the PayPal up now. I've got Bitcoin and Ethereum. You can send me Bitcoin and Ethereum to show your support. Free ways to show support. Drop me a comment. Let me know if you're going to be active in this market. Are you active in this wealth transfer? Are you making moves with us? Subscribing. If you've randomly found my channel, if this is a baby channel, we just started doing this, and it's going to get better. We're working on it. Well, I'm working on it. It's just me. Also, it's just me. So I'm trying to make it better. I'm trying to get better. We're going to do some other things. Like, obviously, I eventually want to get it to where there is a probably a picture box so you can see my face because I ain't trying to hide from nobody. Yeah, I just don't know how to do it. And this is I'm struggle streaming over here. I did get a microphone, so like the audio's decent, but there's some improvements that I want to make on this channel just to make it a little bit more personal, right? So there's that. But subscribing helps, and those of you who are subscribed, share this with people. We're not trying to get rich by ourselves. Definitely content that other people can gravitate into, and it covers a range of skill levels. I'm trying not to get too super technical, but it's going to be pretty technical. I mean, but I'm showing you from scratch. If you're just joining in today, this episode, go back to where I'm talking about shifting the money into the new portfolio and building out the new portfolio, because this is a portfolio that started from scratch January 1st. Well, it's probably like a week before January 1st, but we converted it over, we build it out, the positions grow. It started off with not having 10 positions. We're up to 10 now and just running. As far as actually we're over 10. 13, 14. We're at 14. 14 positions. We started with I think one or two. And now look at us. We're growing. So, we're plugging along here. We're up 49% this week, a drop from last week. I think we hit 60. We were in the 60s. But that's because of the sell-off from the airdrop. But overall, I like these numbers. Numbers are great for me, and it's a green week. Green is good. Green is great. We like green. So, you guys carry on with your weeks. It's your boy, Reckless Ray Dinero. Thanks for tapping in, rocking out with me. And I'm signing out.